Becoming a full-time trader seems like the promised land for many people learning to trade. But something I've noticed is that many traders believe the difficult part is getting yourself to that point, and then things become straightforward. The reality is a bit different. There are so many benefits of trading full-time, but there are also major challenges that you don't have to deal with until you get to that point. Being aware of these challenges will not only help you navigate this transition much better, but also give you a chance to prepare in a more realistic way while you're still working towards that goal. So with that in mind, I want to go through some major challenges that you will face as a full-time trader, and these are based on my own experience and from helping loads of traders over the years. Before we go to 3 mistakes, remember that you can see other useful pieces of advice and information for free in our Telegram channel. There we everyday share analysis, news, strategies, and even more. So if you want to save time, money, and energy, check link in the description, but we continue. Here are the 3 things I believe that full-time traders should never do. You can't control what happens in the markets. It doesn't matter how great you are at trading. That's just an undeniable fact. So it's always a good idea to segment things into 2 categories: things you can control and things you can't. The market itself falls into the latter category, so we can control our trading system, our entry criteria, our position size, and a bunch of other things, but we can't control the markets. Therefore, it's inevitable that you will have better performance in some months than you will in others. So you can have the greatest trading system, but if the market isn't presenting the right opportunities, you're not going to have any trade. Likewise, even if you're taking trades with a positive expectancy, as you should, you still don't know whether the outcome of each individual trade will be a profit or a loss. But this can be a problem for traders who treat their monthly returns as if it's a monthly salary from a regular job. I mean, what do you think is going to happen if you're getting towards the end of the month and you haven't made enough money yet? What if you're at break even, or even worse, what if you're in a loss? You suddenly have a lot more pressure and you're much more likely to take bigger and maybe even inappropriate risks. You'll probably begin overtrading, experiencing FOMO, and risking higher percentages of your capital to try and reach that return that you need. And then, once you're actually in a trade, you will have heightened loss aversion and make decisions that you deviate from your plan. So now I get messages quite often from traders asking about this transition to full-time trading. And they will tell me, I have this much money to trade with, and if I hit the same returns that I've been getting recently, I'll have enough money to live off. But that's not quite the right way to think about it. Instead, you should have enough money set aside to cover your costs for a prolonged period of time, regardless of what returns you make in your trading account. So this means dividing your capital into money for your trading account and money that's not put at risk that you use to cover your costs. Then you can take withdrawals from your trading account less often once you've built up a big enough return to cover the withdrawal amount without whipping out any growth that you have achieved in the trading account. Living paycheck to paycheck based on trading returns is a recipe for disaster. For a context regarding my situation, I wasn't going to be relying on my trading account each month to cover my living costs. I had more than enough money for both. I could make withdrawals once or twice a year to fund my living cost account. I wouldn't have to rely on the monthly returns. You know, I have to say, this next one is a problem I struggled with for many years without realizing it. I had this subconscious belief that if I'm a trader, it means I'm only working when I'm in a trade. Therefore, if I had a trading session without taking any trades, it just felt like I've done something wrong. I would be unproductive in some way. Now, it wasn't such an issue when I was trading part-time because I could go for weeks without opening any trades simply because I was focused on other things. I was used to having days go by without taking an opportunity, but this all changed once trading was my full-time job. If I didn't open a trade during a session, I would actually feel guilty about it. I would feel as if I was failing, like I just wasted an entire day. Now, over time, this would lead me to start extending my trading session times or start following more markets, neither of which would lead to my best performance. But here's something you realize after years of experience, or hopefully you can start to understand it sooner, that if you're analyzing the markets and doing everything that you should be doing, but you don't find an opportunity, you have. Still, being a full-time trader doesn't only involve opening trades. Your performance is defined by your long-term results, not each individual session. So, understanding, accepting this before you make that shift to full-time trading will mean that you put less pressure on yourself. That leads to you taking the wrong actions, things like overtrading or taking bad trade opportunities. Now, when you have a regular job, you are forced into a somewhat consistent routine because of the set hours that you have to work. Then, as soon as you become your own boss as a full-time trader, there is no stopping you from working whatever hours you wish. There is always a market open somewhere that you could be trading if you want to. Now, there are 3 common ways that this can become a problem. You could work too much, not work enough, or not work consistently. My main problem has always been working too much. As I started to make great money from trading, I became a caricature of the expression "time is money." I literally lived my life by that. I didn't want to go out anywhere, and if I did, I was still following the markets. I didn't want to sleep. When I did sleep, I had the laptop open right beside the bed so I could check the markets when I woke up in the night. So I barely even ate. I wanted to spend as much time in front of the chart as I could because missing an opportunity would mean to me potentially missing out on more money. Now, because of this unhealthy lifestyle that I was living, my health deteriorated rapidly and I had several serious symptoms, including a terrible infection. So I was rushed to an emergency clinic. The doctors did all sorts of tests and at one point they were convinced I had some disease, but it turns out I was just severely run down and suffering from chronic stress. Trust me, it's so easy to fall into this slippery slope of thinking more trading time equals more money. But in reality, your performance per hour will be so far from your peak. You will be making more mistakes and nothing about it will be sustainable. In fact, studies have shown that bad sleep can be disastrous for our trading in ways that we are not consequently aware of. But then, at the complete opposite end of the spectrum, you may actually find that you end up working much less, maybe not working enough. Since you're not being held accountable by work colleagues or your boss, your work sessions might gradually reduce as you realize that you could be doing other things. You are likely to be working from home, so it means that you have to constantly battle with all the usual distractions while not having anyone there to tell you off for missing your day to work. So it's only you being accountable to yourself. It's kind of like the cycle that teenagers go through during school holidays. You start going to bed later, then because of that, you start waking up later. Before you know it, you don't have set work times. You just get started whenever you wake up and finish when you feel like it. So now there are many reasons why this is bad for your trading. Before we go through them, remember to check out our free Telegram channel where every day we gather useful information about trading, crypto, and psychology. We wish to have similar in our time, so don't lose the opportunity. Not only is an inconsistent sleep routine just as bad as not sleeping for long enough each night, but the actual skill aspect is going to suffer as well. Without following the market at set times, you will lack a lot of important implicit knowledge. Since a big part of trading is about being consistent, how can you achieve that if everything is your life is in your flux?
You will experience your best performance and be much more likely to have a sustainable long-term career as a trader if you stick with a set routine each day. As boring as it seems, if you achieve consistency in your everyday life, you will be much more likely to experience consistency in the markets. Remember, being a full-time trader is a job, Yes, you have a lot of freedom, but you should still hold yourself accountable in the same way you would if you were reporting to someone else. Now, in most cases, the best way to solve a problem is to think about it logically. Find the root cause of the problem and find ways to overcome or mitigate that. So guys, thanks for watching. Don't forget to subscribe to this channel, share this video with your friend, and like. And yes, we have a great Telegram channel. The link in the description. Goodbye.